All right, so very quickly, we're going to be looking at this illustration, and then we'll be using that to prepare the statement of comprehensive income and the statement of financial position. So we are told that the following information has been extracted from the trial balance of XYZ Limited for the year ended 31st December 2020. You can see the land and building. We have suspended zeros anyway. So land and building is 500,000. Equipment we have 200,000. Our furniture is given to be 100,000. We have sales and purchases. Now you can see that sales and purchases is combined together, so you have to be able to tell that the value on the debit side is for your purchases. Okay, purchases and expenses are debited. Meanwhile, the value on your credit side is for your sales, because sales are revenues and revenues are credited. Okay, now you have carriage inwards, you have returns is not specified outward or inward, so you have to know that because returns inward is a reduction in sales, returns inward will be counter entered. Okay, that is on the debit side. In accounting, when we are subtracting, we counter enter. So because we are going to be subtracting return inward from sales, since sales is on the debit side, return inward will be on the debit side. In the same way, likewise, for returns outward is a reduction from purchases. So because purchases is a debit item, we're going to be crediting returns outward. So you have to be able to explain your trial balance even without you need to be able to explain your trial balance. Okay, that's one of the keys to understanding the final account. Okay, of any business. All right, you have to be able to explain your trial balance. Now we have opening inventory, we have wages and salaries, stationaries, we have utilities, we have general expenses, discount received, commission. It's not said whether it was paid or received, but because you see it on the credit side, it means it was received. Okay, all the receive, all the incomes are always credited. Now we have payable slash receivable. This one is supposed to be very simple. You know that payables are expenses, they are liabilities, so they have to be credited, and then receivables are assets, so they are debited. Now you have carriage outward, you have capital giving, you have cash, and then you have bank. Now I love this because the bank is not stated as either an overdraft or it's a debit balance or a credit balance. Let me use the word. It's not stated that this bank is a debit or credit balance. But one thing I want to explain is that because you can see that the bank is on the credit side, okay, you cannot have an asset on the credit side. Okay, once an asset goes to the credit side, it becomes a liability. So that means what we have here is an overdraft. Okay, a bank balance that is showing a bank account that is showing a credit balance automatically um in the cash book. If you have a bank account that is showing a credit balance in the cash book, they will know that what we are dealing with is what? Overdraft. Okay, now we have drawings given, and then we have a balanced account of 5 million on both debit and credit side. Now the additional information given is this, that the inventory at 31st December 2020 is what? 350,000. Now we have commission of 450,000 was due, but it has not yet been received as at the date. Okay, so this is an accrued income. The commission is due but not yet received. And then lastly, we have accrued salaries and wages that amounted to 80,000 naira. So these are accrued expenses as at the same date. Now we are required to prepare the statement of comprehensive income and then the statement of financial position as at 31st December 2020. So we are going to go back to the board and then we'll prepare this step by step. The first thing we're going to do, like we always do in every time we are preparing any account at all, you start with the name of the owner of the account. Okay, so in this case, our account belongs to XYZ Limited. Okay, and the first information, the first statement we are preparing is the statement of comprehensive income. Okay, so we have comprehensive income statement for the year ended 31st December 2020. Okay, now the next thing is our currency sign. We have brought in our currency sign. Now let's start with, since it's comprehensive income, we're always starting with our income, right? So in this case, our income we have is what? We have sales. Okay, we have sales, and you must know that since sales is a credit item, that means the figure for sales is 1,800,000. Okay, so we have sales, and then the value for sales is 1,800,000. I'm saying that because we have suspended zero, right? And then we have returns inward. Okay, we always less return inward from sales. Okay, the value of our return inward will be on the debit side. Okay, in this case, our returns inward is 40, okay, that's 40,000. Because like I said, the value is, okay, so we have 40, giving us a total net sale of 1,760,000. So we've gotten our net sale. The next thing we should calculate is our cost of goods sold. Okay, we will need to calculate for cost of goods sold. Okay, now for the sake of adjustment, I like to add at this point the third column because of the adjustment for the cost of goods sold. Okay, so for the cost of goods sold, we have opening inventory. We always start with that, and our opening inventory as given in the equation is 150,000. So we have 150. Okay, now we are going to do adjustment for net purchases like we always do, and our adjustment we have purchases, we are going to add carriage inwards, and then we, of course, with less returns. Okay, the value for purchases is given to be 850, 850,000, and then we have carriage inward, of course, and we're going to have less returns outward. So the value of our returns outward, like I said, on because we are lessing from purchases to be on the credit side, okay? The value of returns outward is 100. So we're going to, since we are lessing using the brackets, let's get our net purchases. This plus this, and then we are subtracting this, okay? So that will be giving us a net purchase figure of 800. All right. Now 800 is coming to meet opening inventory. Okay, okay, we are coming to add our net purchases to opening inventory, okay, to give us cost of goods available for sale, and then we less closing stock. Our closing inventory is always outside the trial balance, and we are given that we have 350,000. Since we are suspending three zeros, we are less than 350. Okay, and then we'll get the value of the cost of goods sold, which is what, 600. Now we're going to less cost of goods sold from our net sales to get gross profit from this, okay, to get gross profit of 1,160. The next thing we'll do is that we're going to add every other income, okay, so we have other incomes, and in this particular transaction or this illustration, the other incomes we have discount received, we have commission received, okay, because like I said, the commission is on the credit side, that means this commission was received. Now discount received was given us to be what, 150,000. I'm going to add that quickly. Now for the commission received, there is something on that because we have an adjustment that commission of 150,000 has not been paid. Okay, has not been received. Okay, so it means that that commission was due for the year, but it has not yet been paid. Okay, so whether it was paid or not, that income was for the year. All right, so we have to add it up to the commission that has been received, which is given in the trial balance to be 350,000. So I'm going to be adding 350 to be 150,000, all right, for the commission that was received, and then the one that is yet to be received, although it is due for the year. And that will be giving us a total of what? 500. So with this, we can add up to get our total income. This is our total income or net income. All right. Now we're going to, once we've gotten net income, we can now less other expenses. All right. So let's go for the other expenditures. We have wages and salaries, we have stationaries, we have utility, we have general expenses, all right, and I think carriage outward. Okay, so let's go. So for wages and salaries, we are also told that salary of 80,000 has not yet been paid. So even though it has not yet been paid, it is also an expense for the year. Okay, so this is how we do accrued income and accrued expenses. Once the income is due but not yet paid, add it to the income that was paid. Once the expenses is due but you have not also paid, add it up to the expenses. Okay, so you have total expenses, both paid and unpaid, okay, for the year. Now, so we are going to be adding for the salary, we have 20,000 given in the trial balance. We are going to be adding the money that is due but not yet paid, which is what, 80,000. So I'm going to be having 20 plus 80. Okay, to work on this column to give us what, 100 for salaries and wages. To be 15. Okay, there's no adjustment to that. We have utility to be 12, general expenses 18. We have carriage outwards. Okay, and carriage outward is given to be 100,000. So this is our total expenses. Okay, so we'll add this up to get net expenses for the year, which will be giving us 245,000 naira. With this, you can proceed. Okay, you can less your net expenditure to give us net profit. So lessen this amount from 1,800 and 1,810 naira. Okay, we'll be left with 1,565 naira. So this is our net profit figure. Okay, so now we've gotten our net profit. Don't forget we adjusted for this commission received. Okay, we have included that unpaid portion. When we go to wages and salary, we also included the wages, the unpaid portion. Now when we get to our statement of financial position, we have to describe our asset, liabilities, equity. Okay, now this amount is your own, it has not yet been paid, so it is your assets. This amount, it is not your own, you are owing somebody. It's a claim of an outsider on the business. So you have to reflect it as a liability, okay? Although a current liability, okay? Because you don't plan to owe that money more than a year. And this one also is a current asset, like because you are not planning that they should owe you more than a year, okay? So that's what we're going to do when we get to the statement of financial position.